You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means we are back once again. It is Thursday. It is 1:30 p.m. Central. It is 2:30 p.m. Eastern. You know what's going on in the world of futures options. Spoiler alert, a lot. We're going to get to as much of it as we can on the old show today. Welcome to TWIFO, This Week in Futures Options, a program where the name pretty much says it all. We break down the week that was and indeed still is from a futures options, trading and trending and analysis and all sorts of fun perspectives, the skew, the vol, what are the hot options trades out there. We're going to dig into all of it. My name, of course, Mark Longo from the optionsinsider.com. A lot of great data up there, a lot of great show links. Of course, your unusual activity, your most actives throughout the day, the earnings vol summary. So all that fun if you want to kick the tires on that stuff over there. And of course, if you want to go above and beyond, get a little bit more content in your lives. And who could blame you? The optionsinsider.com/pro. Also available there. Once you click on that link, you'll have access to 250 some odd episodes coming at you through the exclusive Pro podcast feed, a live stream, so you could join us here on this show, everything else we do. Of course, great giveaways and a whole bunch more. TheOptionsInsider.com/pro. The place to go as we head on out, see who's joining us today in the old CME Group hot seat. I'm pleased to welcome back our old friend, Miss Energy Upside herself, Carley Garner, the senior analyst and broker over there at DeCarley Trading. Carley, welcome back to the show. We seem to have good timing with you because whenever there's a little bit of green in the energy screens, you somehow magically appear on the show.
It is. It feels that way on this end as well.
You have willed it into existence. All right. With the hot seat filled, listeners, let's keep on rolling right on into the movers and shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, listeners, welcome to the Movers and Shakers Report, the portion of the show where we break down everything lighting it up to the light side, a.k.a. the upside, and to the dark side over there at CME Group this week. And right now, looking at this chart, it's a whole mess of green on here. Of course, we run these reports a little bit earlier in the session. That gives us time to get everything together. Also, get it over to the folks over there at CME so they could tweet it out ahead of the show. I'm sure if we re-racked this now, it might not be as green. The worm has turned, at least in the broad equities, and that usually tends to drag a lot of other things with it. So I'm not sure if it'd be 50-50, but there'd be a little bit more red, a little bit less green on the screen right now. If you went over and checked out this report, if we tweet it out before showtime, or of course CME does as well, you would see that it looks roughly 80-20 green over red out here on the full cross section of all the products. And in terms of the largest percentage mover, we're gonna credit that to the upside, even though the dark side doing its darndest to compete out there. All right, Miss Carley, the table is set. The pieces are moving. Where should we begin our journey this week?
I assume the choices are light side and dark side. I missed that even.
That is,
let's go dark.
Yes, that is how the show begins. Luckily, you've been here once or twice. I think you could roll right with the punches. All right, to the dark side we go, listeners. We start things off in the ags, listeners, in particular, KC Wheat, off 2.82% this week. Number 4, we jump from ags all the way to crypto, one of our frequent offenders. Is it still a frequent offender? I don't know. You might have to revisit these. For the better part of this show's history, certainly since the pandemic, the top 3 movers and shakers have been lumber, Bitcoin, and nat gas. Might have to revisit 2 of those. Lumber not really that active anymore, and Bitcoin has moved a little bit over the last month, but it hasn't exactly been the banger it once was. So might have to revisit that. But right now, Bitcoin coming in at number 4, off 2.88%. Then back to the ags we go. Number 3, soybean oil off 3.29%. Number 2, keeping it in the ags, but moving on over to livestock. It is lean hogs off 3.75%. And the number 1 dark side mover this week, keeping it in the ags. No love for the ags this week. It is oats off 8.78%. You know the deal with KC Wheat and with oats, and even to a degree with Bitcoin. Not a ton of options paper to sink our teeth into out there, but perhaps if something intriguing comes across our radar, perhaps we can venture out there. Now to the light side we go, listeners. Like we said, it is mostly light side out here this week. Coming in at number 5, these sectors keep popping on our radar more and more. Again, no options to speak of yet. The futures markets are still growing out there, but certainly interesting, I know, for a lot of you who like to see how the components of the various indices are moving. Well, here you go. Number 5, the tech sector of the S&P, up 4.4%. Surprise, surprise, tech is moving. It was number 4 in the same direction last week, up 1/3%. So that, again, shows you how anemic the light side was last week. You had to go almost pretty much to unched to build a top 5. Not quite the same this week. A lot of green on the screen this week. Number 4, right behind it, we have the communications sector up 4.45%. So a whopping 0.05% difference between the two. Number 3, off to the metals we go, listeners. It is silver up 4.5%. Number 2, going back to the indices, but this time international, off to the Nikkei, the yen-denominated Nikkei, up 4.6%. And the number 1 light side mover, you knew we were going to gotta go off to energy. And in this case, it is nat gas. I'm showing on my screen right now up about 21.5%. That seems a little bit rich from this time last week, so I'm going to have to re-rack that. Either way, it is still demonstrably higher on the week, listeners. And since Carley, I know, a huge fan of all things energy as well, I think we're going to hang our hats there first.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, listeners, to the topsy-turvy world of energy we go. You know where to find this fun for yourselves, listeners. CMEgroup.com/TWIFO, TWIFO. TWIO, TWIO, this week in options should work as well if you're in a pinch. And once you're in that drop-down, listeners, go to asset class, go down 3 slots to energy. And then from there, where we start, I will leave it up to Carley to choose. Carley, I know you're fascinated by both oil and nat gas. Where should we start in the energy sector this week?
We might as well start with nat gas. It's moving.
It's like I knew exactly what you were going to say. It's like I already pulled this up on my screen. It's like you've been on the show once or twice before, Carley. All right. To the world of nat gas we go, listeners. So go into that product family drop down. Going to go down 3 slots to nat gas. And that's where we're going to hang our hats this week. Nat gas 333 in that front future. So up quite a bit, over 10%. Is it 21.5%? I don't know. I'll have to dig in to see. But either way, a big pop out here in nat gas. Clearly our number one percentage mover on the week, and clearly our number one light side gainer out here. And in terms of action, it's a banger week out here, listeners. 687,000 contracts on the tape for nat gas this week. You know, you've been listening to this show for a while. Nat gas usually slots in somewhere between 400 and 450,000 contracts on a normal week. This is obviously anything but a normal week out there. Of course, all this unfortunate activity spilling off over there in Israel this week. Israel, not a big energy producer, but of course, a lot of things are shipped through there. There's also the concern about this spilling over into other areas, which of course could have all sorts of repercussions for the energy space. And also Israel does have some impact on the nat gas scene as well, hence this big pop out here. So a lot to unpack. Carley, obviously, unfortunate events playing out overseas, and the most direct contrast everyone immediately drew was to the energy market. What was catching your eye out there this week in the nat gas space?
Correct. So obviously natural gas has spent several months just consolidating, and everybody's waiting for the big up move. I feel like it's a little too easy for this to be the up move that matters. Seasonally, according to MRCI statistics, say selling or being bearish now for the next 3 to 4 weeks is a better bet than being bullish. So from a seasonal standpoint, we probably should roll over. From a charting standpoint, we've had a really big upswing, but we've got some thick resistance. The November contract, I would have a hard time seeing it get above 350 unless something fundamentally changes. I mean, we still have a supply glut despite all the news and all the chaos that's going on. I have a feeling this rally gets sold into, but if that's the case and we come back down to the lower end of the range, I think we're probably setting up for some really good bullish opportunities going into the winter and early part of next year.
I know a while ago when you joined us on the show a few months back, you were looking at the upside. I think it was the 3 calls in September. Those obviously worked out well. Then we retraced. You took those off. Were you looking at some upside this week? I know these events this weekend took a lot of people by surprise. Were you sitting on the sidelines? What were you up to in nat gas heading into this weekend?
Yeah, we did. Unfortunately, we didn't have much going on there. We had kind of had our eye on some other balls, and that one just kind of got away from us. So, but I do think there is going to be another chance to play the upside in nat gas. I would not chase prices higher. Been there, done that. Chasing natural gas higher is generally it's a losing proposition most of the time. So I wouldn't do that. But I think if you're patient, you'll get another chance to play it.
Yeah, I can certainly see why you were sitting on your hands out there. We were talking about it on the show not too long ago about just in general, the skew wasn't really showing us a lot. You know, it was kind of hanging out at equilibrium. There wasn't a market bid to the calls or the puts or a discount. It seemed like we were kind of hanging out in equilibrium right around that 2 3/4 level, a little bit north of there. It didn't seem like, you're right, there was a lot set to drive things north or south from there. And then lo and behold, we have all this activity unfolding over the weekend, and off to the races we go again. That's what makes, I think, for a lot of you folks out there, energy interesting and or concerning out there, because of course it has the potential at any moment to pop off. Of course, a lot of these products come from an area of the world that is, to put it mildly, restive, and so these things can happen pretty much at the drop of a hat, like we saw this past weekend. And here we go, off 10, 15, 20% in nat gas, kind of at the drop of a hat. Let's dig into some of this paper and see what we're seeing out here, listeners. I said there's 687,000 contracts on the tape, almost exactly half, 49.9% of that paper going up, listeners, in the November contract that has 14 days to go. So we're playing straight in the weeklies out there right now. I don't know, Carl, this is something I've been mulling over for a while. I'd like to get your thoughts on this as well. We did a poll actually a few weeks ago. Everyone's obsessed with zero DTE and the indices, but we were looking at what other products do we think, and indeed complexes, would be well suited to 0-day paper. We have 2-week contracts here in nat gas, but nat gas has been known to move a little bit. Do you think we could see a 0-day contract at nat gas sometime in the future, Carley?
I think eventually it seems to be heading toward basically data day of expiration options in all markets. So I think eventually, yes. At the moment, though, natural gas is kind of a tricky market because if you look at options, there's European style and American both listed, and they're similar in price and nature. So it kind of dilutes the liquidity a little bit. So it might take natural gas a little longer to get those shorter dated options than some of the other markets. But eventually, my answer is yes, it will happen.
Seems like WTI is headed there first. They have the weeklies. It's a natural progression to add a daily on there. Nat gas has a little ways to go, listeners, in terms of the mechanics of the underlying getting the options going there. We don't really have weeklies yet. We have 2-week contract. But hey, it's an intriguing one. I know a lot of you have asked about that. So the potential for 0-day in energy is there, probably in WTI first, but nat gas probably someday down the road. Because right now, again, 50% of the paper going up in the contract that expires in exactly 2 weeks. So people clearly want some near-dated paper. Now, I know for a lot of you slinging 0-day equities, 2 weeks is an eternity, but that's as near-dated as it gets right now in the nat gas, listeners. I said we're at about a 333 out there. What is the vol in nat gas? You might be surprised to see it's at about a 53, a little bit shy of 54, actually, 53.85, off about 765. So that vol actually coming in pretty aggressively this week, which may come as a surprise to a lot of you out there. In terms of skew, last week we had the call slightly bid, 3.8% bid, but nothing earth-shattering out there. And the puts were flat. So not a lot of interest to the downside, some to the upside, but not a ton. This week we have shifted now. The puts are 3.5% cheap, and the calls nearly 6% bid. Again, we have exploded to the upsides. That's going to wreak havoc with the skew out there as well. But maybe that might surprise you as well, that maybe the call's not as bid as you might expect. Again, it was an explosive move, but maybe we've seen kind of the apex of it now, so maybe we're settling back in. That could be one of the reasons why we're seeing the calls perhaps not quite as bid as you might think. In terms of action, though, it was all 4 calls all the time. Interesting. 4 calls in November, going up 35, almost 36,000 times of this week, 13,000 today. Again, there's about 17,000 open, so that could be closing today. About 13,000 yesterday as well. It seems like mostly closing. 4,300 on Tuesday, also closing, and about 5,000 on Monday. So it makes some sense as we got closer to the 4 handle. Some folks were piling in earlier in the week, then maybe they started taking them off as the week progressed. I don't know, Carley, the 4s in November, 2 weeks to go. Does that sound a little bit too rich for your blood? What are your thoughts on those?
Well, I mean, the odds of $4 natural gas in that time frame, in my opinion, is pretty slim. But then again, we're living in explosive times and anything is possible. So if you're the type of person that would rather have a foot in the door and there's some fear of missing out type of mentality there, sure, why not?
Yeah, that is definitely a FOMO trade right there. 4 handle in. Hey, listeners, if you want that, you want to roll the dice a little bit, get yourself a little bit of a nat gas scratcher, a lottery ticket. Allow me to present the 4 calls in November. Right behind it, though, we have the 3 puts going up 29,000 times this week. Interestingly enough, the big day, not today or even yesterday, was Tuesday. 9,000 contracts going up on Tuesday. Mostly opening there, so maybe some folks coming in to hedge this big move and say, hey, I want to keep my profits here around the 3 handle. Looking at the skew, the puts got a little bit cheaper, so maybe there was some overriding action there as well. 7,500 going up yesterday, slightly closing. 6,500 today and about 6,000 on Monday. Worth noting there are about 30,000 contracts open on this strike, so today's paper is pretty much anyone's guess. And then right behind it, again, it is all very front-loaded paper here. 3.5 calls, so if the 4 is not doing it for you, 3.5's a little bit more reasonable by comparison. 24, almost 25,000 of these going up this week. The big day for these is today, 8,300 going up today. The OI is about 26,000, so again, anyone's guess as to what they're up to out there today. Yesterday, 7,100, mostly closing there. Again, makes some sense as we're getting closer to that 3.5 strike. Some folks taking that off the table. Could probably be the case again today as well. Tuesday, 5,000 and 4,000 on Monday, opening on Monday and Tuesday on these 3.5 calls. Then we have the 2 3/4 put. So if the 3 puts not doing it for you, the 2 3/4 puts coming in at number 4, about 24,000 of those going up this week. The big day was yesterday, 9,000, slightly opening there. 7,300 on Tuesday, also opening. 6,000 today and about 2,000 on Monday. Again, there's about 17,000 contracts open on the strike coming into today, so today's paper could be anyone's guess. Is anybody closing the 2 3/4 puts today? Either way, intriguing stuff here on nat gas. Let's go a little bit farther out to see if we see any other interesting and or aberrant prints. Worth noting, we've been talking about these call strips for a while, listeners. Looks like they have shifted back to the puts, and they were doing 5 calls and above before. This week, it looks like it's the 2.5 puts going up around 3,300 times from April all the way out to the end of the year. So it's interesting who's putting up these puts and what they're up to out there. They're slinging a lot of calls when we're lower. They're slinging a lot of puts when we're higher. It's intriguing use cases for these put strips, and also worth noting there are some even more optimistic calls if we go a little bit farther out. If you go out to Jan or February of next year, it's all about the 5 calls. Remember, there's a big seasonality out there. That future in February is trading a 379 right now. So the 5 calls, not quite as outlandish as it may seem. They went up about 9,300 times this week. The big day was today, 3,300 today, 2,600 on Monday, about 2,200 on Tuesday, and about 1,000 on Wednesday. So opening on the Feb 5 calls all week long. Worth noting, it was about 11,000 and change open on this strike coming into today. So interesting. 5 calls out there in February. Does that float your boat, listeners? Are you more intrigued? How about the 7 calls in March going up 6,000 times this week as well? So there is some optimistic upside to be found, shall we say, out here in nat gas. I know, Carley, you said you're kind of you're not going to chase prices out here. Are you up to much with your clients, or are you again kind of a little bit more of a wait and see in nat gas right now?
At the moment, we're mostly wait and see. There's some action in other markets that are a little more interesting to us. I mean, if you look at a natural gas chart, we've attempted. This is probably about the 4th time we've rallied up in this similar manner, and it's given back every time. So again, it just seems too easy to put on bullish positions right before winter. It generally doesn't work that way. Usually we sell off first, wash everything out, and then do it. So we'll see. I mean, you never know. And it probably doesn't hurt to have something cheap out of the money just in case. But I think a lot of people are thinking, they remember what we've seen in natural gas, the last couple of years, these explosive rallies up into the high $5, $6, $7, even $10. Those days are probably far behind us, and we probably don't see that for quite a ways down the road. So I wouldn't be expecting anything like that. That again, things change quickly, but I don't think that's in the cards.
Well, let's see what's in the cards on the other big dog in the energy complex, which is, of course, crude oil. Let's go out to WTI, listeners. Pop out of that product family drop down, get out of nat gas, go all the way up to the top, and go to crude oil. You'd see there right now WTI hanging out at 83.25 in that front future. It's up about 0.5 point on the week, or about 0.58%. Of course, we were talking about on the show last week. It kind of seemed like nat gas had found a bit of an equilibrium point from a skew perspective, hanging out in the low 80s range. Of course, blowing the doors off from a volume perspective this week. Kind of like nat gas, WTI usually in that 400 to 450 range. This week closing in on 750,000 contracts on the tape. So a pretty action-packed week out here in WTI. Carley, the last time we chatted, you were looking at triple-digit crude oil before the end of the year. And then we saw a bit of a retracement out there. And then, of course, these most recent developments in the Near East kind of conspiring to elevate energy across the board. What's catching your eye out there in the crude oil side of the fence this week? So
I do feel like we still have a probable chance of seeing 100, 101. That's what my weekly chart's been pointing to for quite some time. I don't have as much conviction today as I did the last time I joined your show. The last time we joined your show, we were obviously trading a little lower. And since then, we did reach the front month. Did reach 95. That's not $100. I recognize that, but this is an art, not a science. And sometimes like $4 or $5 in oil is close enough based on most analysis. So I still think we might see $100, but I'm not I just don't feel quite as confident about it at this point. I think that 95 may or may not have been it. Seasonally, the market tops out right about now. So you want to be really careful being too long crude oil. We've seen what oil can do when demand gets pulled away. And a lot of the gains that we saw were, in my opinion, tied to the OPEC production cuts. And as we learned with the SPR releases, those types of manipulations are temporary. So eventually the market's going to have to stand on its own 2 feet. And I'm not sure that it's got enough to really keep the bull market intact. That said, geopolitical tension, obviously, that we, unforeseen or we don't know about quite yet, could easily push us back up into the high 90s, 100 area. But I think I'd be a bear. Right here, I'm neutral. I'm not touching anything. But if we did get up to those high 90s, 100 area, I'd probably be bearish, to be honest.
Yeah, it was looking really good in your favor. We were rallying north. We got into, you're right, the low to almost mid-90s. And I was like, man, Carley, right on it. And then they just cut the legs out from it completely. It was an impressive reversal right back down to the mid-80s. So you were right there. You were kissing it. You were on the cusp, close. Carley. So, yeah, if you had some options on, you probably still did all right. You got most of the move people wanted, right? If you're waiting all the way to 100, you haven't learned by now, right?
Yeah, that's the thing. If something goes your way, take the money and run. You can't get greedy with this stuff because just literally 24 hours can be an entirely different world. So always a good idea to take money off the table if they give it to you.
That's what we always say in all of our shows. You see these big moves and people put on weekly options. You're like, what are you waiting for? And they want more. And then, of course, it all reverses and it's all gone by the next afternoon sometimes. So, yes, take something at least off the table. You got a big move. We had a big move in WTI. If you got all the way up to the low to mid 90s and you did nothing, that's on you.
I gotta agree with you. I mean, the problem is with having price targets is people they have that target set in their mind and they refuse to get out until it gets there. And that's really, that's the wrong way to look at it.
Get while the getting is good. How many times have we said that on the network, listeners? Let's see what people are getting up to out here in WTI, listeners. Like we said, a pretty active week, well over 700,000 contracts on the tape. And the most active cycle out here, again, we have weeklies and effectively dailies. All right, now we have a contract going out in 1 day in WTI. So we are getting there. We are getting to that cusp of the zero DTE phenomenon, spreading its dark tendrils into WTI. Are you ready for it out there in energy? Well, it's coming, listeners. We have a contract expiring in a day, in 3 days, in 5 days, in 6 days, in 7, 8 days. You have quite the smattering of expirations in WTI. Now, if you look at CME on Twitter, they're very excited about how much paper is going up in these weekly contracts. So right now, 33%, so fully a third of the paper is going up in the contract that expires, I should say, in 5 days out here, listeners. So again, when we first launched this show, we wouldn't touch anything that was within 2 weeks. I would always joke about how it's not vol, it's gamma. But the worm has turned. If you don't talk about this stuff now, listeners, you're missing the lion's share of the action in these products. So we will dive into these. We'll tiptoe around some of these vol numbers. Like, for example, the vol in the 5 day to go contract, 34 and a third, up about a third of a point. Vol, that near dated, a bit of a misnomer out there, but that's what it is for those of you who are intrigued. Skew-wise, interesting to see what's going on out here. I think there is some merit to looking at near-dated skew data because it does show a lot of near-dated sentiment. And last week, the puts were kind of flat, and the calls were about 4% bid. This week, the puts 8.1% bid. So folks coming for the puts, and the calls 7.3% cheap. So in the roughly weekly contract, folks are fading the heck out of this rally. They're bidding up these puts and firing away on the calls. Carley, does that surprise you that folks are bidding up these puts so aggressively and crushing this calls right now in WTI? I mean, this looks like a mini S&P or equity skew out here, Carley.
Right. Honestly, it doesn't shock me. I think crude oil probably isn't going to stay quiet for much longer. We're probably going to get a really big move one way or the other. So I don't think it's a bad idea to have something out there, cheap options on both sides, honestly.
Well, let's see what options are lighting it up out there today, listeners. And it looks like it's the 90s expiring in 5 days. So the November 90s that were leading the dance out here. Didn't quite get to a 90 handle, but then again, you got 5 days. That's an eternity in the market these days, listeners. The 90s doing 23, almost 24,000 contracts. The big day for these on Monday. So obviously coming out of the weekend, folks were a little bit concerned about the events unfolding there in the Middle East. Not surprising, we might see some 90s lighting it up for size. Nearly 10,000 going up on Monday, mostly opening. So folks piling into the 90s maybe thought this was going to spill over, have more of an impact than it ultimately did, at least for right now. Tuesday, about 6,000 also opening. Wednesday, about 5,000, again, also opening, and a little over 3,000 going up today. So a total of about 12,000 open on this strike right now coming into today's paper. So today's action is open to interpretation. And then right behind it, we have the 95. So if the 90s expiring in 5 days, that's not optimistic enough for you. Allow me to present the 95s doing about almost 23,000 as well. So the paper doesn't quite line up 1-to-1 because the big day for those was Wednesday, almost 10,000 going up on Wednesday, mostly closing there. 6,000 today, 5,800 on Monday, and about 1,400 on Tuesday. So it looks like opening earlier in the week, closing in the middle of the week, in today's paper. There's about 10,000 open still on the strike, so today's paper could be closing as well. Doesn't quite line up with the roll, listeners. It's kind of all over the place, the paper. So it's not like the folks were rolling from the 90s up to the 95s. In fact, a lot of the 95 paper was closing. So if anything, looked like it might be rolling the other way, which is also interesting. But either way, 90s and 95s going out in 5 days, leading the dance this week, both with about almost 23,000 contracts. Then we go out a little bit, actually, going back to what Carley was saying about maybe there's another move coming down the road here. Some folks are playing out here in the D's pars and doing so for size this week. 21,000 of those going up this week. Worth noting the big day there, Monday, 9,500 on Monday, 5,000 on Tuesday, 4,000 yesterday, and 3,000 today. It seems like folks were bailing on these pretty much all week, closing all week long, listeners. I even said coming into today, there were still 43, almost 44,000 contracts open on the D's par strike. So there's still more to go. Maybe some folks thought we were going to get more of a move than we did, and they started getting out right away, though. Started getting out on Monday. So interesting that we didn't see some folks maybe piling into these, thinking we're going to have a bit of a pop. They were going the other way and getting the heck out of Dodge. Right behind them, the D's 90s doing about 19,000 contracts this week. These were opening. So it is possible we had some rolls from the pars down to the 90s because pars closing all week, 90s opening all week. Again, doesn't line up 1-to-1, but there is the potential for that. The big day for these, 7,500 on Monday, 4,700 on Wednesday, and 3,400 each Tuesday and today. Worth noting coming into today, there are about 19,000 contracts open on this strike. So today's paper, a bit of a drop in the bucket compared to that OI. There's always some longer-term funky paper out here. Let's look really quickly, see if we can see anything else that is interesting and or apparent. The pars were active pretty much all the way into next year as well. The Feb pars going up 6,000 times. March pars going up, looks like about 8,000, 8,500 times. So the par strike active across the board. Think we can get there, listen? Think we can threaten triple digits? That certainly kind of lines up with what Carley was saying a while ago on the show. It doesn't sound like she's quite there anymore, but intriguing stuff nonetheless. 90s also lighting it up out here in Jan, 11,300 contracts. So not surprising that it's mostly upside lighting it up in WTI this week. A little bit surprising that folks are maybe bailing in parts where I thought maybe we would see some of the opposite. So there is some intriguing and or surprising paper out here. We could probably do the rest of the show in energy, but we already have been going on for half the show in energy, Carley. So let's, so for the folks who don't trade energy, let's get something else on here. What else is lighting up your tape this week that you're dying to talk about on the show, Carley?
Grains had a pretty big day today. Let's go to the grains.
All right. To the world of the ags we go, listeners.
It's time to get our hands dirty exploring the latest options, trades, and trends in corn, wheat, soybeans, and more. It's time to talk ags.
All right, listeners, to the wonderful world of ags we go. Get out of that energy drop down. Go all the way up to the top of that asset class list. It's ags. It's easy to find. Starts with an A. It's an alpha order list after all. And then from there, we'll go into grains and oil seeds. And then where we go from there, it's up to Carley. We shall see a lot of things lighting it up on the ags front this week. In our movers and shakers, we had KC wheat at number 5. We had soybean oil at number 3 to the dark side. Lean hogs number 2 to the dark side. And oats number 1 to the dark side. Carley, what is catching your eye and lighting up your tape in the world of ags this week? Where should we start first?
I like the grains, beans and bean meal, soybeans.
All right, we can go to the world of soybeans if you like, listeners. So go into that product drop down once you go into the asset class grains and oil seeds and we'll kick things off in the beans. We talked about soybean oil, but obviously soybeans are going to do a lot more paper, and they're lighting it up this week. 362,000 contracts on the tape in soybeans this week. So that is nothing to sneeze at. That is pretty impressive paper. Soybeans right now, if you're not following them, listeners, a 1288 in that front future, up about 22 handles or about 1.75%. So soybeans popping, while the oil taking a bit of a hiatus out there this week. So, Carley, what's catching your eye out there in the land of the beans?
Well, we deal with a lot of farmers and ranchers and we're helping them hedge. We kind of encouraged them this morning to pull off their short futures hedges and put some option spreads on. And with a little bit of hindsight, we would have probably just stayed out. There was a USDA report and it triggered a huge rally in beans right from support levels. So the timing's a little unfortunate. I'm sure a lot of people were looking at the 1250 support in November beans and not touching it just simply because putting something on ahead of a report is a little bit dangerous. So there's probably a lot of people that missed out on that. But soybeans seasonally start to put in some sort of a low, and there's been a lot of chatter about rough crops out there. I mean, we won't know until the harvest is complete, but I'd say somewhere between 1250 to 1225 and front month beans is probably a pretty good place to forge some sort of a low. So I like the upside.
You mentioned the farmers, and that's always fascinating to me when we get into a show like this, because a lot of our other shows, we're breaking down, your Teslas and your VIX and your SPYs. There are no producers or end users in those markets at the end of the day. So a very different use case for those options. But you get into the world of futures options, you get into the ag, some of the other products. There are indeed producers and end users out there who are using these to hedge their production, and a lot of other different use cases than we see in a lot of our other traditional shows, which makes the flow we see out here so fascinating to me. You mentioned a lot of your end users are farmers who are reticent still to use the options. You had to kind of lure them to the dark side. Are you starting to see a little bit more acceptance there? I know traditionally they would go to the futures. That's probably their more normal hedge. Are you starting to see a little bit more, shall we say, awareness of the options, a little bit more acceptance to use those as their hedge instead, Carley?
Yeah, we've actually been pushing options pretty hard not pushing, but suggesting is a better word, because farmers unfortunately, a lot of farmers were actually going unhedged because, it's futures contracts, obviously the leverage and the margin issues that come with hedging with futures and just the sheer volatility. I mean, beans were up at one point, 46 cents today. If you're a producer or an end user, that's a really big swing. And sometimes it's hard to stomach and it creates a lot of anxiety. And so we've kind of been encouraging people to use options where you can at least put some sort of a price floor underneath. For example, we do a lot of risk reversals. So farmers that are long in the field, in other words, they're growing corn or soybeans or whatever it is, we can do something on the option market where we sell a call and then use the money that we collect for that call option to buy a put. And that way they get kind of a free insurance policy. They're not going to lose the farm if the grain market completely collapses. And if it rallies sharply, they have the cash market gains to pick up the slack on anything they're losing on their hedge. So options are a really, really excellent way to hedge. And we're trying to educate people to that fact.
I love to hear it, Carley. You're fighting the good fight out there. So if you're a farmer, you're still a little bit nervous, call up Carley and the team. Maybe they'll lure you to the dark side. It's a fun dark side. Trust us. Over there in the world of options. Let's see what's lighting it up out here on the soybeans options. Like we said, a pretty active week. 350 plus thousand contracts on the tape this week. And of that, it looks like almost 2/3, 63%. Going up in the contract that expires in about 15 days. So we're going to hang out there, listeners. Again, not quite 0 day, but you're not really going to see that in the ags. They have their own rules of engagement. There's one complex that I think is, I won't quite say immune, but not really set up to be favorable to 0 day paper. It would be the ags. It's all about the new crop, old crop rotation there, the 0 day. Not quite there yet. Not to say we won't get there eventually. I'm sure every product will have some flavor of 0 day eventually, but not quite there just yet in the ags. At the end of the day, it makes dollars, it makes sense, right? And the exchanges see a lot of demand for these, so they probably will try. Whether it resonates with you folks out there is a different question. But right now, what's resonating are the 15-day to go contract. The future out there, 1288. What is the vol in soybeans this week? It's about a 17.10, off about half a point. It makes sense. You got some of that event risk coming off the table out there, but maybe some of the surprise move maybe offsetting that a little bit. In terms of skew, last week we had kind of a slight bid to the puts, 2.3% bid with the puts last week. The calls 2.1% cheap. This week that has exacerbated a little bit. The puts are now 3% bid and the calls 3.3% offered. So a slightly bid to the puts, but nothing crazy. We've seen interesting and very aggressive setups in some other commodities out there. The beans right now, at least from a skew perspective, not blowing the doors off in either direction. Let's see what's going on from a volume perspective. What was the hot trade out here? And it was the 15-day to go par puts, the 1,200 puts that were lighting it up this week to the tune of 27, almost 28,000 contracts. The big day today, 10,500 going up today. Worth noting there are 19,000 open on the strike, so they could be closing there. Monday, about 9,000 going up, slightly closing there. Wednesday, 4,600, and Tuesday, 3,500, both opening. So opening in the middle of the week, closing on Monday. Not sure about today's paper, but they could potentially be bailing out there as well. And then right behind it, we have the 12.5 puts going up about 18, almost 19,000 times. Once again, the big day is today. So today, a big day for the beans. 8,000 contracts going up today versus an open interest of a little over 11,000. Monday, we had 3,300. Tuesday, 5,800. And Wednesday, 1,500. So closing all week long. So you can maybe assume that today's paper was closing as well. But again, we don't know that for sure until we check the numbers tomorrow. And then right behind it, we have the 1240. So if the 1200's not doing it for you and the 12.5's a little bit too optimistic for you, the 1240's a little bit closer to home, going up about 14,000 times this week. The big day for those, interestingly enough, not today, but yesterday. 5,000 going up yesterday, 3,600 today, 2,800 on Tuesday, and 2,000 on Monday. Looks like it was opening Monday and Wednesday, closing on Tuesday, and again today, 3,600. The OI is 9,300 on this strike today. So could be bailing there as well. Let's go a little bit farther out to see if there's any other interesting and or aberrant paper. Doesn't seem like it. Seems like it's mostly lining up around these 1,200 strike in the 15-day to go contract. But we talked about the beans. Anything else catching your eye in the world of ags you want to dive into, Carley?
I've been patiently waiting for the wheat market to do something on the upside, and I think we're finally getting pretty close to that area. We've been talking to a lot of farmers, and actually, unfortunately, a lot of farmers went unhedged this season because, they had their eye on those really big prices. And I think we're just now finally starting to work that all out of the system. Sometimes commodity markets are victims of their own success. I mean, when producers see $13 wheat, it's hard for them to get that out of their mindset, and so it kind of skews the market. And a lot of times it pushes us to lower prices than what we probably fundamentally should be at. And I think that's a situation we're at in wheat. But hopefully we're near the end. We're playing the upside with option spreads, bullish option spreads, basically buying call spreads and selling puts to pay for it.
So you're having a hard time getting farmers to buy in on hedging wheat around 600 when they're expecting it to explode north of 1,000 again, like they saw last year. Is that what you're saying?
That's exactly right. I mean, and I can't blame them. It's human nature. Nobody wants to sell wheat at $6 when 2 months ago they could sell it at $8. So I totally get it. I'm not blaming anyone. That's just how we're wired. But it's a really good reminder that if you are a producer, you have price risk, or maybe even just portfolio risk or any type of price risk in your life. When things are good, make sure you have some sort of backup plan in place, because especially in commodities, rallies, they're never permanent. Prices are always temporary. You want to make sure you're doing the right things when prices are favorable.
Would you ever think about in this market, maybe to alleviate some of their concerns, maybe you sell the upside call, maybe around the 600, maybe you sprinkle a few long calls above it, maybe instead sell a call spread just in case, Putin decides to lose his mind again and wheat goes north of 1,000? Is that your approach right now? How would you approach these kind of markets where people are hesitant to sell at these levels?
Well, what's happening is a lot of them are being forced to sell at these levels, just simply because they've got the product and they have operation expenses, and interest rates are really, really high. So they need to bring cash in. So a lot of them are being forced to sell here as far as their cash crop goes. But what we've been suggesting is, if you do have to sell here, but you want to be there if wheat goes up, you could just buy some cheap calls, $6.50, $7 calls, out in July or something, just to have something in place, or some sort of call spread. I mean, it depends on the situation and how much product they have, but selling puts, buying calls or call spreads, I think, is a really good way for both speculators or farmers that have to sell their cash crop and want to get, re-own is what they call it. Basically, they want some upside exposure just in case, because they feel like they missed the boat.
Let's check out how that boat is floating, listeners. We had KC wheat coming in at number 5 to the dark side, off 2.82%. We're going to look at Chicago wheat, though, just because it does a little bit more paper. Almost 91,000 contracts out there. Net actually up slightly on the week, is at about 572 3/4 in Chicago wheat. I'm sure if we go back to the end of our show last week, it would be a little bit of a different story. In terms of paper, almost 91,000 contracts on the tape. Of that, about 40% going up in the Dees contract that has 43 days to go. Again, kind of why the ags maybe don't make sense from a 0-day perspective. At least not quite yet. Everybody loves to pile into Dees at the end of the day. That future still at about 572 3/4. The vol out here in Chicago wheat, 31 even, off almost 2 points, about 1.8 points on the week. So vol coming in still decently frothy. A 30 handle is nothing to sneeze at these days, when we have VIX still languishing around in the teens, and most of the other complexes we're going to talk about here are well below a 30 handle. So, 31 is not explosive vol, but again, comparatively, it's nothing to sneeze at out here as well. In terms of skew, we had an interesting week last week. The puts were 6.5% cheap, and the calls 13.3% bid, so a monstrous bid to the calls last week, especially when you consider that vol is kind of low. And then this week, that has come in on both wings. The puts 5.4% cheap now, and the calls 7.5% bid. So still rich, but that bid almost getting cut in half this week. And in terms of action, it was the 550 puts, the 5.5 puts in December that were leading the dance this week, with about 4,000 contracts. So the big day is today. Actually, the big day was Monday. 1,600 on Monday, slightly opening. 1,200 today. And then about 800 and 300 respectively Tuesday and Wednesday. Worth noting, it was about 5,000 open on the strike coming into today, so today's paper is anyone's guess. And then behind that, we have these 6.5 calls. So the 550 puts and the 6.5 calls, they went up 3,300 times. The big day for those, 1,400 yesterday, 1,300 today, and then a couple of hundred each on Monday and Tuesday. It's like folks were bailing yesterday, and today's paper, there's 15,000 still open on this strike, so they could be bailing out there today as well. And actually, you know what? We kind of buried the lead, because it looks like it might be the par calls in November that actually took the lead with 5,500 contracts on the tape there. So they were at least a number 2. Yeah, they were number 1 this week. The par calls, 5,500 of those going up this week. The big day for those actually Wednesday. 3,000 going up on Wednesday. Slightly opening, 1,000 each Tuesday and today. Closing on Tuesday, again, we don't know today's paper, but there are 4,300 contracts open, and then a few hundred contracts going up on Monday. So 600s actually leading the dance that expire in about 15 days out there in November. We got a little bit of time left, Carley. I want to make sure a lot of our folks are probably wringing their hands over what's going on in the indexes. So let's wrap things up in the world of equities.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, everybody, welcome to the topsy-turvy world of equities. Pop out of that asset class, drop down in the ags. You're going to go down 3 more slots to equity indices. We usually cut our teeth in the S&P, but it's anyone's guess what we're going to go up to today. In terms of action, Carley, it's been an intriguing day and indeed an intriguing week. Everyone, well, I shouldn't say everyone, a lot of people thought we might open up in the red this week, given all the unfortunate events that played out over the weekend. And we did ever so slightly. Then I think what surprised a lot of people was the aggressive nature of the rally that unfolded pretty much throughout the rest of the week until today. Today we saw the worm turning a bit. We were rallying earlier in the session, And then the S&P got its wings clipped all the way down to about 43.25 this morning, right before showtime, actually. Then it seems like, so it was off nearly a full percent. And then it's starting to rally a little bit from there. It's only off, I say only in air quotes, only off about 2/3% right now. So it seems like we're rallying back to about the 43.5 level as we're coming into the end of the show, but still red on the day. So a crazy week, a topsy-turvy week, and indeed a topsy-turvy day. I'm sure your phones were ringing off the hook over there at DeCarley this week. A lot of folks saying, Carley, make sense of all this madness for us. So now is your chance to do that for all of our listeners, Carley. Make sense of the madness that is the indexes this week.
Well, I actually think that obviously the events over this weekend triggered some volatility and caught some people off guard. But what's really happening is a big story that was dragging the S&P down the last couple of weeks was interest rates. Interest rates were basically spiking in a parabolic fashion, and I think we were getting some capitulation in treasuries. According to my charts, we actually drew outside the lines a little bit, so it was really messy. But according to my analysis, what we saw in treasuries last week was most likely capitulation, which means we're probably in the process of turning the corner. And I think everything hinges on interest rates. If you look at correlations between treasuries, the dollar, and stock indices, they were running at like 95%, meaning as interest rates were going higher, stocks were going lower and the dollar was going higher 95% of the time. And usually they usually move in somewhat of a correlation, but not like that. That signaled to me that there was something broken in the system. And I think it was treasuries. And I think that we're in the process of correcting that. Today, treasuries are having kind of a rough day because there was an auction and it didn't go so well. But I think this is just kind of a pullback in the process of a bottom in treasuries. And if treasuries go up, honestly, it probably pulls everything else with it because it pushes the dollar down and makes everything else look a little better on paper. And I think that's really all we need, at least for now. So I don't think today's the end of the bull run in stocks. I still think we recover from this and go a little higher.
Who knows? The way this day's playing out, we could end green again on the day. It's a crazy whipsaw day out there, listeners. No surprise, we're seeing a metric ton of zero-day paper in the E-mini S&P right now. So far on the week, listeners, we are at 4.7 million contracts, and a good chunk of that coming today as we're seeing a lot of paper across the board. I'm trying to filter out all the noise paper, so the 3575 and the 3600 puts going up about 100,000 times each. We'll just filter those right out, listeners. If you want to get to the more relevant strikes, looks like it's the 4375 puts going up 23,000 times, again expiring in a few minutes, as well as the 4420 calls, again expiring in a few minutes, that are leading the dance out here, at least for right now. 23,000 of the puts going up, 20,000 of that today. So as we said, these whipsaw days, they drive a lot of paper. So 4375 puts, those were in the money. Those are still in the money. So intriguing to see what's going up out there. The 4420 calls, not sure we're going to threaten that today, but nonetheless, 18,000 of those have gone up today. And then right behind it, 19,500 of the 4415 calls have traded this week, with about 17,000 of that going up today. So these are all expiring, like we said, in a few minutes. It's fascinating to watch how much paper is piling in. 4380 puts, 21,000 going up today. 42 half puts, 20,000 going up today. So it's just an explosion of paper. I know this is not new, listeners. This is kind of the way of the indexes trade now, but still, just seeing how much of this paper is all just this zero-day phenomenon is really fascinating. In fact, the biggest print we can find beyond the stuff going out in the next day or two, we have to go all the way out 15 days to the par puts, the 4,000 even puts, going up 21,000 times this week, listeners. So that's actually impressive paper for something that's not expiring today or tomorrow. They went up 21,000 times, 10,600 today, and 10,000 on Tuesday. Opening on Tuesday, looks like they might be bailing on these today because that volume today lines up almost exactly with the OI. So maybe they put on a bit of a flyer on Tuesday and getting the heck out of Dodge today. Either way, the 4,000 puts leading the dance outside of the dailies. Even then, it's kind of hard to find any paper outside of the tsunami of near-dated stuff. If we go a little bit farther out, let's go out a whopping 36 days, listeners. There's also the 4,000 puts are trading there. So these even dollar strikes, even money strikes, still capturing the imagination a little bit farther out. They went up 25,000 times out there, trading, again, almost half of that today, 12,200 today, 9,200 on Tuesday, and about 1,500 each Monday and Wednesday. So big print on Tuesday and opening today, obviously, because there's only 7,600 on this strike. So folks are opening on the 4,000 puts again today. Did they maybe get spooked seeing this sell-off and think, hey, we're going to retrace back below the 4,000 level? Or are they just trying to harvest a little bit of the old premium, get while the getting was good? Either way, fascinating stuff to be found out here in the indices today, listeners. All right, unfortunately, that music means we've come to the end of another sojourn through the world of TWIFO, listeners. We sunk our teeth into energy, sunk our teeth into the ags, and a little bit of a taste, a little bit of a morsel of the equities there at the end, listeners. But before we go, Carley, if there's anything else catching your eye in the markets, maybe some trends or developments you want to share with our listeners right now, and then also, if they want to learn more about what you folks have cooking in the land of DeCarley, where should they go? What should they do?
Well, do we dare talk about treasuries? And if people can find us at DeCarleyTrading.com, DECARLEY trading.com.
Well, you know what? Just for you, Carley, we are kind of coming up against it, but you know what? We could squeeze in a little bit of the old rates. Listeners, pop out of equity indexes, go down to interest rates, and then pick your poison, Carley. Are you more of a 10-year girl? Where do you like to hang out in the rates?
Yeah, let's look at the 10-year notes.
All right, 10-year it is. That seems to be where we usually come down in the rates. That seems to be the sweet spot for a lot of our listeners. 30 years, too long. Anything near dated, a little bit too close for our listeners. 10.7, almost 10.8 million going up in the 10-year right now. 107.08, up 0.13. And that front future going out in about a day. Carley, what is catching your eye really quickly in the 10-year right now?
I think it's worth having some cheap March calls out there. I mean, a lot can happen in a handful of months, and there's plenty of upside potential.
There you go. Cheap March calls, listener. Let's see right now if anything's going up in March. Looks like the biggest trade in March, listeners, only 325 of the 108 halves. So of this 2.7 million contracts, nobody's trading in March. So there you go. You got March all to yourself, Carley.
There you go. Perfect.
You can be all the OI in the 10-year in March if you are so inclined. And Carley, if folks are intrigued, they want to learn more about maybe what they should put on in the 10-year or in nat gas or in any other complex, where should they go? What should they do?
You can follow us on social media, search for Carley Garner, or on Twitter, it's at Carley Garner is my handle, and the website's DeCarleyTrading.com.
There you go. Check them out, DeCarleyTrading.com. A lot of fun to be had over there. Also, check out some of her books, Trading Commodity Options with Creativity, Higher Probability Commodity Trading, and a Trader's First book on commodities. That's going to do it for TWIFO this week. It's also going to do it for the network today. But don't worry, back again tomorrow, noon Central, 1 p.m. Eastern, to talk all things vol. With our buddy, the once future and now present Mr. Dr. Vic. Should be fun. A lot of vol to talk about. Just from today. So stay tuned for that. If you're not listening to the full network, listeners, make sure you're subscribed so that you get a little bit of the old volatility views in your life. And then after that, for all of you pro folks, we're back with a little bit of the old options oddities. Should be a banger one tomorrow. I was just talking with Andrew. He's got a lot going on in the world of Oatly. I got some fun UVIX to relate, some VIX as well. All sorts of fun going on in the land of options oddities. You can check that out for yourselves, listeners. TheOptionsInsider.com/pro. Get in there before tomorrow's show so you can have access to that show as well as the 250-plus episodes waiting for you the second you hit that button. Then we're back again on Monday with the option block all the way through to next Thursday and another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.